Hey guys. All right, so we've had some pretty major reversals lately in a lot of different markets, but I wanted to go over at least the 6E, the ES, and the reversal today and yesterday in crude. I guess let's start with the 6E. I know a lot of you guys aren't too big on Elliott wave, just want to do pure market geometry, but Elliott wave does kind of lend itself well to market geometry, especially for finding things such as the ends of corrections, especially the ends of fourth waves, and your major reversals. So what we've had in the 6E here, the euro, I think is potentially the C wave of a triangle. And I think this first wave down, which is a very clear 5 down, I'm talking about right here. I don't believe it's a 1. I think it's more like an A. I believe that is going to be the beginning, the first leg of the D wave. So does anybody know how you find the end of a fourth wave? What kind of channel would you draw to find the end of this fourth wave? If this is your 1, 2, 3, 4, 5, how would you find the end of that fourth wave right there? Any ideas? Yeah, you're going to draw a trend channel, but where are you going to connect? A lot of people would rather not draw lines where you have a swing that intersects the trend line. So for instance, we had a pretty good example of that here, actually. Where are you? Yeah, let's look at this one. There it is. So some people would say that this is not a good trend line. In this case, it's not in the context of Elliott. So it's not in the context of, measuring from 1 to 3 to find the end of 4. This is more just skipping this section, this swing up, and connecting to the next one to find the end of this move. Now this, it might be coincidental, but that's pretty spot on. I mean, that's giving you the exact time and price of the end of this, huge wave down, which luckily I was able to catch most of. And then it stops on a dime on that exact hour and turns right back up, right where the median line is intersecting the channel line. And this is one of the signals we're going to program directly onto the chart. So it'll draw like a little arrow like this or something every time we have a bar that touches both the median line and the channel line. So in order to find the end of a fourth wave, it may be that you're going to have to cut through part of wave 3 when you're drawing from the end of wave 1 to 3 to find the end of 4. So typically when you're looking for the end of a fourth wave, and I can't believe ES has already broken 2100 today when I had the low of the day, but such is life. So yeah, here we are. Right here. So when you're looking for the end of the fourth wave, you're going to draw a trend channel from 1 to 3. And oftentimes it's going to be exactly at the point where the median line is intersecting the channel line. That wave 4 will end. And we can do that on the minute chart or the tick chart. And I've just broken it down very clearly here on the tick chart. So we have a perfect 5 down. The close of this, it must have been some kind of news announcement, or maybe it was just a short covering rally, but the close of this bar, even on the hourly or the 5-minute, did not come back inside of wave 1 here, back here. All right, and even for wave 3 here, we have a nice, depending on how you want to count 1 and 2, we have a nice 5 down. Okay, so we had 1, 2, 3, 4, 5, and a nice ABC up for wave 2. And then we had a very clear 5 down for 1, a nice A, B, C up for the smaller 2, the 2 of 1 lower degree, and then a very clear 5 down for 3, and then a double 3 for wave 4, and then another clear 5 down for the end of wave 3. All right, so at this point, we would be looking to find the end of wave 4 here. All right, and what is wave 4 going to do? It's going to typically retrace back into the previous 4th wave. So if this is the previous 4th wave, the next 4th wave will typically retrace back into that area. And that's what it's done here. But when we try to find the end of it, we're looking at the previous 4th, but we're also looking at the trend channel from wave 1 to 3. And it's most often going to meet that trend line, that trend channel line in time and price where the median line is intersecting it. So that's why Elliott and market geometry kind of go hand in hand, because your ultimate goal is to find points of major reversal. If you want to eliminate Elliott wave from the equation altogether, that's fine, but it lends itself very well to finding, especially the end of corrections, especially wave 4. So we simply just draw from the end of wave 1 to 3. And there we go. Now I've chosen to use this swing low as opposed to this one so that I'm not cutting in right here. It's kind of the widest point, or what Moores would call the maximum excursion to the left of wave 3. So it's not quite the end of wave 3, but it's the maximum excursion left, so such that I'm not slicing into this 3rd wave right here. But I am slicing through this one, and this is what some people would have a problem with. But that's just textbook Elliott wave. You can go back and look at examples in Prechter's books, or anywhere online, and that's what you'll see. They'll draw from 1 to 3 to find 4, and then you can draw from 2 to 4 or 0, the starting point of the wave, to find the end of 5, and then connect from 1 or connect from 3. So I haven't even done that yet. Let's see if that even gives us anything at all. Gives us the midline there, but let's see. I'll connect, and we'll do this on the minute chart as well. That's exactly the same line. So I could have connected a trend line from 0 to 2, and that would have also given us wave 4. So yeah, that's not really doing it. Let me do this. I'm going to open up a brand new chart, show all the relationships here. we could have simply drawn from the starting point to wave 2. And that would have also given us the end of wave 4 right here. It's about a couple of ticks away. And then the midline gives us 5 because here we have divergence. And that's another thing about finding the end of wave 5, which is why I think the high is in crude. And we'll go over that in a minute. And then of course here we've broken out of this downtrend channel. Nagib is asking, if I have time, can you go over your trade in ES? I bought the low this AM2 at 87.50. Yeah, I got 87.25, but got out too soon. Wanted to see your entry and management to compare. Yeah, we'll go over that in a minute. All right. And then we would also connect from 1 to 3, which is actually here. And there, everything is overlapping right here for the end of wave 4. And then we have a lower median line for the end of wave 5 here. Okay. And I think if I draw from the widest point to the widest point, nah, it's cutting through slightly. Yeah, that's giving us the better lower median line there, which we're actually touching. At any rate. So even on the minute charts, this is lining up perfectly, which is really not, well, I guess the larger you go, the more common that is for things to line up both on the tick and the minute chart. When you're looking at a really close-up view, really fast charts like a minute, 1 minute or 2 minute with a faster tick chart, say a 200 tick chart or 300 tick chart, then you'll see the difference between the number of bars that are plotting on the tick charts versus the number of bars that are plotting on the minute charts, including the overnight. But usually the larger you go, say with a really large tick chart and a really large minute chart, say a 240, things will kind of line up fairly well. So again, if we go from the end of 1 to the end of 3, we have the median line intersecting the channel line perfectly at the end of wave 4 there. All right, and what's happened here, and I wish, I were up this morning at 1 a.m. or 3 a.m. I would have gotten out up here because I went long yesterday right here at this low, and then was wanting to hold into what I was thinking was going to be a third wave, thinking that we were going to get a much larger correction for this B wave. I'm thinking that this is a really a giant A wave down that doesn't suit. So let me actually draw that out. I'm thinking that's a big A, and then we'll see a big B wave up. So I was looking for a third wave coming up and out, but really all we got was this really nice ABC back up, which ended perfectly at the previous fourth wave and at the upper median line. And of course, we had a churn bar at the end of it, which is a major spike. You can see the supply coming in there as it's closing off of its highs, goes back up and tests on the next bar, which breaks, 1 tick above the previous fourth wave, which is also the 23.6 retracement of the entire move. So I'm thinking that either this is the first ABC of a larger flat, and we're probably coming to an end right now, and then going to see 5 up for the B wave and then come down again in another 5, at which point the dollar will begin its next move up. And then we should probably dip below parity. And then find a major low and then turn back up, and the dollar will have ended its bull market. So at this point, I'm expecting 5 up. Now the only problem is we've had a complete 3, right? So this is a complete correction right now, and it has reversed back to the downside. We have a huge and very clear impulse down, and it's a perfect 5 waves. You couldn't ask for a more picture perfect Elliott wave example than this. And then we get the perfect little correction. The only problem is it's only retraced back to the previous 4th in a tight little ABC. So this is, most likely not a second wave. But if it's complete, then this would be the end of the B wave. The only thing I don't like about it is that it's only a fraction of the size of this huge impulse down. So if we looked at that as far as time extension, it's less than 20% of the size of this move. So let me put in 20%, which is very, very rare for a second wave or even a B wave. So I'm of the opinion that this correction is not over. Let me just delete that, grab this guy and bring it over. So yeah, even at 20%, that would put us right here. So that's pretty rare for a solid retracement, a solid correction of this huge down move. So that's leading me to the opinion that it's not over. We've just got the first 3 of a flat. So that would be your A, B, C, which would be A, and then B, and then a C wave up, which could bring us back to the 50. Or maybe not quite to the 50, maybe only to the 38.2 or in between. Nonetheless, it will trace out within a median line. So we would draw, if it's bottoming out now, we would draw like so. We'll probably trace out 5 up into here, something like that. And then put in a major high and begin the next 5 down. This is going to be something I'm going to be watching because I want to participate in that next giant move down, something I want to try to hold for, I don't know, probably several days to a couple of weeks. But this is something we're going to be watching develop over the next week or so, or however long it takes to develop. I think I had a question here. Let me see. So you're saying we're still working this 4th wave? I think so. I think so. Because that's pretty small. No, this isn't a 4th wave. This would be a B wave. So I'm looking for big B. What happened? Oops. Looking for a big B. Or, and I started off saying kind of my alternate count. I was showing the daily chart. Kind of getting ahead of myself. This, I was saying before, this could be a triangle. So if that is the case, then we've made the A wave down, which is what I was showing a minute ago. And then now I'm looking for the B up, which could take us a little bit further. And then C down would take us back into, well, let's see, it would typically take us 61.8, right? Because right now it is looking like it's starting a triangle or has started a triangle. So I'd be looking for that B wave to come back up off of this support on the daily which we have found support clearly. I've just drawn a sliding parallel at the median line from the low here, which we have rejected off of. So now I'd just like to see a little bit deeper retracement. And then come back down. In a C wave, which should have much less momentum, well, generally, it may not, but generally it would have less momentum than what we've just seen over the past few weeks or several weeks, few weeks in the euro. So that would put us for the big D wave, and that would be a B, C, D, and then the triangle E, which would give us one gigantic triangle. And then we finish the bull market in the dollar, which will probably be at the end of the year, maybe next spring. Robert is asking, how do you know or anticipate whether a corrective wave following wave 5 will be a flat or a zigzag? You can't. The only way that you could is by looking at the previous correction. So if you're going down in 5 waves and you're in a 4th wave, if the second wave, that's kind of like their little principle, the law of alternation. If the second wave were a flat, then maybe for the 4th, you would be expecting a triangle or a zigzag, something to that effect. You really don't know what you're going to get until you're in it. But once you're in it, then you try to find the end of the next move so that you can participate in the following waves. You're always looking for the end of, if you're looking for the end of an impulse, then you would be waiting for the next end of the correction. So if you're looking for the end of an impulse, you're just waiting. Hopefully you're already in that trade. You're looking for an exit after the end of the impulse. Then you're waiting for the correction. And that's where you're trying to find the end of that, major correction so that you can participate in the next, what you think is going to be the next impulse, which is what we had today in ES. And for some reason I get scared out. So let's go over that. So we had a really lovely setup today in ES. So let me get it started here. Where are we? Yeah, right here. This is where I got in. So I'll just start with, I'll come back to this one. We'll start with the larger charts. Well, this is a 20-minute anyway. That's it right there. Okay. So I've been looking for, well, we call it this one, right? We got a, or actually no, I took this in YM and I got a chunk of it and then got stopped out on the report. What was that, yesterday? Yeah, yesterday. All right, so that was the end of the 4th wave. Which is all very, very clearly marked out for you. Which traced out a perfect channel within the tick charts. Here it's a little bit awkward looking because it's including the overnight and it's a minute chart. But after it broke through that channel, then the parallel coming off of the end of the A wave gave you the end of C. It looks much cleaner on the tick chart, which we'll come back to. But right here, as I'm looking at this, we've got the first wave up, and then we have a really clear ABC. I mean, it's, you see this stuff all day, every day. You see 5s and 3s all day. You can choose to, not learn Elliott or anything about it and just focus on market geometry. But if you have Elliott, then you at least have some sort of framework by which to measure these 3s and 5s, which I have found has helped me over the past several years. So at the end of this move down, first of all, we're coming down in a selling climax on this 20-minute chart. That's a huge, huge 20-minute bar right here, right? And it's on very low density. So what is that telling us? We've broken out of this low right here, and we did so on not very high volume. The previous bar had a lot of volume on it. And that was at the, that bar closed at the crude oil open. All right, so it's coming down, coming down. I think somebody tried to trade it long in the room right here. I was going to wait for the open and see what it would do. And then at the open, it rushed right down to the lower median line here and gave us a nice long setup. I think it was a volume divergence on the 2-minute. Let's see that. So at this low, I'm expecting, well, if it's doing what I'm thinking it's doing, then it's probably going to do an extended fifth wave. So then it should be going up into a third wave. All right, it's retraced exactly 78.6. And you've got 138.2, pretty close, not quite, but pretty close. So that's the 15-minute RTH. We'll come back to that one. And this is the big tick chart that I was using, all right? So this is what I meant talking about the trade yesterday. This was the entry here. On the tick chart, see it's, you know, the bars in the overnight are taking up much less space. There's much fewer bars in the overnight than the minute chart, obviously, which is why I was saying the closer in you look, the faster the chart, the larger the variation between the tick charts and the minute charts, which is why you want to have a tick chart so that you can find these channels on the tick chart when on the minute charts they're actually breaking out of those channels. So that's why we have to use both. So it came down in a perfect ABC for the end of wave 4, and then wave 1 up is an impulse move up. And then this morning, it came down. So I had drawn this one in before we started the room. I drew this channel from the high here to the high here, let it overthrow that just a little bit. This is let me just draw it for you. All right, let me erase all of this. This is a standard NinjaTrader trend channel. I drew this because I wanted to bring it back to the end, the starting point, all right, which when I came to the office, it was what? It was right here, yeah. All right, so I was looking for an ABC down. We were talking about it during the room that this was potentially the end of the C wave. I said I wasn't going to take it. I don't know, I think I was watching something else at that time. I was in another trade. Yeah, I was managing the trade in the Europe, the long. So I had drawn from high to high and then back to the starting point here. All right, once it came down, this is a double 3. You got an A, B, C, which is W, X, Y. And you got an A, B, C. So when it completed that right at the 78.6, right at the 100% warning line of the trend channel, and down through, so you get that nice throw under, but not, once it gets below that median line and hits that 100% warning line of the trend channel, the 78.6, it immediately comes back up, and then we get that churn bar. So all of this was happening, and this is a very large, it's a 4181 tick chart, 4,181 ticks per bar. So this is all happening on very high volume per second, coming down, rushing down into that low. It's a selling climax, but it's still a very low volume. It's pretty low volume per tick even. And you can see that on the 20-minute. So once it turns up, then you get that churn bar, and I think I got in at the close of that churn bar, yeah. And then I bought 2. I had another order to buy here, another order to buy here that never got filled. I got chickened out of my first one right here. And then once it broke out of this trend line, I went ahead and got out of my last contract here. But I was expecting a third wave up. For some reason, I just decided not to hold it. I don't know why. But I was expecting a third wave up, which would typically go 138.2 to 161.8. So you could expect to get up to at least 2109, 2110 with this. So we were expecting to break this high. We said at least this high. All right. And you kind of have a little double top here. And that's really just the first wave meeting resistance of the previous B wave and then retracing down to the 78.6, finding support, and now you're in the third wave. So that means we've still got room to go for the end of the third. So this is probably 1, 2, we're about to make the end of the third, and 4, 5, which will go up and finish this big impulse, and then we'll have another correction similar in size and scope to this, at which point we could potentially enter long again, and probably Monday. And then we should have the end of this move, which could be a very serious high coming up within the next 6 or 7 trading days, if not sooner. So does this mean we're at all-time highs now? It does, right? I do believe so. I don't have a daily chart open right here, but fairly sure that we are. If not, we're getting close. No, we're not quite, maybe. What is the high there? I don't know. Anyway, what is the all-time high, Tim? Here we go. 2135. Yeah, so we're getting up close there. Yeah, there you go. This is a 60-minute. So yeah. Wave 2. I was thinking more like wave 4. Maybe. Yeah, that's probably right. Either way, we should be going up for a little while longer at least. I'd say another week. So we've definitely got room to the upside. It is kind of weird trading at all-time highs, but that's why you have to use some kind of a framework by which to judge whether you can keep on going, or maybe you're coming to a high and you don't want to trade that next corrective low because maybe the next correction is going to turn into an impulse down. So at any rate, this was that entry in crude and ES. I think we have did I not open the ES? Yeah, I did. Yeah. You've heard me say this several times at the end of C waves. That's typically where you're going to have the V tops and V bottoms. So if you're looking for the end of a C wave, you may not necessarily anticipate volume divergence at that low. All right, because you may get that selling climax followed by a churn bar, which will immediately turn back up without looking back at all. And on the 2-minute today in the ES, and this is right where I got in, we had that V bottom. Doesn't necessarily look, well, yeah, it does. I'm going to say it doesn't necessarily look like a V bottom on the 2-minute, but really it does. On the 20-minute, you can see the steepness of it, how steep it is. Straight down and straight back up. But what were really the main areas that we were trading were those lower median lines, right? We had a midline and then a median line. I'll come back and show you those. Those were really the main areas that we were trading. But this is what I mean by at the end of a C wave, you'll typically get that V bottom.
Oh, and a VPOC.
From the entire move. So we slightly overthrew, throw under, whatever you want to call it, down into that lower median line and threw it slightly on a really big selling climax just after the open, 20 minutes after the open. And then followed by a doji churn bar. And as it started turning up, I was watching that tick chart mostly, but this is where I got in right here, I think.
Yeah.
Oh, I got in right here. Okay. Just after that churn bar there with some orders just slightly lower. This was also the warning line, the first warning line, the 50% warning line of this channel, which is a very small channel, but nonetheless, on the 15-minute RTH chart, the regular trading hours session, which is here, we had a really nice median line here. Low to low, and that's what we bounced off of the past 2 days. You see it? That's about as pretty as it gets. And this actually is also a midline. So we have tons of support for both of these trades.
And the VPOC from the entire move.
From the entire move, from this low right here,
Yeah.
on the RTH or the ETH?
ETH. It probably is on the RTH as well.
Yeah, it is. It is. It's the
Yep.
VPOC of the entire move.
Very nice.
Mm-hmm. Everybody understand what that is? The volume point of control. It's the price at which the most volume traded for this entire swing up. So we just had, tons coming together here at this high, this low. Pardon me. So on the ETH, you had a midline there as well. Which was from high to high. And there was your resistance on the way down with the upper median line. And then we found support at the midline of that channel on bullish divergence in the RSI. And then support once again. And of course, you could draw a sliding parallel there. So you just had a ton. Yeah, man. The problem is, holding for the target, because we had it's just a very obvious correction down, and then this is a very obvious 1-2. So you're holding for a third wave, which you have an idea of how far it's going to go. And if you don't have an idea of how far it's going to go, what are you going to do? You're going to exit where the median line intersects the channel line. So if I could just enter the trades and then pay somebody to manage them for me. Yeah, there we go. So that's what we're going to do. But you're at least holding for the channel, right? We know this much, yeah? Which is why we have the market geometry, because we know that we're going to trade from area to area, or at least trade to the next area. So, yeah, it's just, very little risk on this one, but so, it was a decent trade, but imagine still being in it and holding for the actual target, which is what I was saying today, is if this is a third wave, then we're going to break out of this channel, right? And if we break out of that channel, then we could potentially end up at the warning lines of the channel, and preferably ending up where the upper median line meets that warning line, which would be exactly right here. All right, so that's the real potential of this thing. Now you do have 3 churn bars back to back here into the close, but we'll find out what's going on here in about 45 minutes.
Christian is saying for that VPOC, you don't have the extreme left high at the time when the bottom was formed.
Yeah, but it's still the same, isn't it?
Yeah. So you might
I mean, we saw that in
explain.
real time, didn't we?
And it would be the same because there's almost no time spent
On the way up?
Yeah.
Yeah. Yeah, so the VPOC is still there. See, it's actually the bottom of the 30% cluster. So really, for me, this is the value area right here. Oops. You can, so many different nuances and ways you can look at profiles, but for me, this is the value area. This chunk, the top of it and the bottom of it. So this is very fair down here. Very cheap, if you will. But regardless of all that, you've got an impulse up and 3 down right to the 78.6 at major support with a median line, a midline, a selling climax into that low on very low density on the 20 minutes. So a lack of supply, a lack of real supply, a lack of heavy selling. And then they stop it on a dime, which you can see on the 2-minute very clearly here. Selling climax, which is very low density. You can see how much density it is. It's actually 74%, whereas the previous 2 bars were 93, 93. So we're talking less, I don't know, 15% less or something, which is very significant from one bar to the next. So very low participation as far as number of contracts selling through this bar. Contracts per tick, I'm saying. Volume per range. So that means that there is a lot less contracts needed to move that market down. Essentially, they're just letting it drop. It's a selling climax with low participation. They're letting it drop down to the area. Once the area is hit, then you've got the buying come in with all that. Tons of buying. They're still selling here. Public is selling, no doubt. But the bar is not moving anywhere. So that's absorption right there. Selling climax followed by a narrow range bar, which closes up off of its low. Actually, closes where it opens. It's a doji on very high volume per range, and they will work it up. Now, the exit that I took was a fine exit, not fine according to my target, but we did have, I don't know, was this a report? Oh, that was a crude oil report. Crude oil report. So we did have a little volume divergence there, and it did knock it sideways for a bit, but only right back into the VWAP. I could have had a re-entry right there. But I should have just held to my target. At any rate, I know it can be tough to hold through stuff like this for a swing trade, which is really why you just got to put the trade on and kind of walk away when you're in a swing trade, which was the only reason I was able to hold that crude, that short in crude. It basically just screamed straight down to the downside. You got to love those, but you don't get those too often. So anyway, yep, it's a good move. Nagib is asking, what made you get out on the first one at 90.25? I think it was a upper median line there or something. Right here? Oh, no. It was this trend line right here. It had run into it, found resistance, came down, came back into it, found resistance, came down, and it broke the low of this bar. So I said, well, I'll take one off so that if I do come down and get stopped out, I still will have made money on the trade. And yeah, right when I sold it, it turned back up. So yep. No questions on that. Samir's asking, this reminds me of a question. When you draw the HR lines, why do they revert to gray colors? Oh, you can't do that. You can't apply those to all charts because they're not drawn by Ninja. You'll be able to do that in the next version of the toolbar. But no, you can't use these to double click on and then apply to all charts. Not with this version of the toolbar. With the next version of the toolbar, you'll be able to do, anything you want. All right. So that's not belittling at all. So we've got the next move in crude. This is what threw me off in crude. So we had very clear 5 waves down, right? What do I always say about 5 waves down? It could potentially be a C wave, right? But if it's starting at a high and it's not starting below the previous high, if it's starting above the previous high and you've got 5 waves down, what do you need to anticipate it potentially being? You need to anticipate it potentially being the C wave of an expanded flat, right? And what's the maximum allowance for an expanded flat typically? For the C wave, 261.8. It's like 2 ticks through the maximum allowance. And what is typically the maximum allowance for an expansion of the B wave? 100%, a 1-to-1. So let's delete all of this.
So Corey's a genius.
Corey's a genius. Yeah, I just didn't trust him. Still trying to get used to you, man. Thought you were at Jinx. All right. So you've got 1, 2, 3, 4, 5. And then this, and then this. And I'm like, well, what is, I don't know. I don't understand this. I see 5 here very clearly. Yeah, I don't know, Trevor. It'll be done when it's done. It's a lot of work. And it's completely brand new code and being totally rewritten. So there is no ETA on it. It'll be done when it's finished. So we've got 5 up, and then it comes down in 3, and then goes back up in 3. I keep hearing a week, but I don't know. I'm not going to give an ETA because then it's, problematic. So we've got 3 down and then 3 back up. So you're thinking correction, you're thinking expanded flat. So we thought expanded flat. So I try to get in right here. We had all kinds of areas right here, right? But the really major areas that we had on, what was it, the big tick charts, right?
Yeah. Trend lines, lower median lines, I think.
Or right here.
So, no, it's right.
So these things have been working very, very well lately. The average daily range, high and low. So the average size of a daily bar is this big. So when the market opens, which it opened here, that would be applied, average daily size of a bar would be applied to the open. Right, and then as it moves up here, it moves up with it. So the low is now here. Then as it comes down, that low is fixed. So this is the average size of a daily bar, right? So we came down, where did we hit? We hit, I don't know that this is the one that I need, is it? Anyway, we reversed down from this trend channel line. Let me just delete all of this. We reversed down from this trend channel line, and we came right down to the average daily range low, which gave me, more reason for the long trade there. And then to both of these lower median lines, which I'm just drawing back to the most recent swing lows, we came right down to those lower median lines and the 88.6, which leads me to believe that we're still in an ABC. So if that's the case, what do we have right here? So what did I just tell you about the end of fourth waves? What do they typically do? Which is why I just almost took a long trade just now. So if this is one, two, three, four, and we're looking for the end of 5 for a big A, B, C, and then come down, we're looking for the end of that fourth wave to align with the channel and the median line from waves 1 to 3. So I had drawn this a moment ago, and I had an order in to buy as a double bottom here, but it didn't fill just before the presentation here. So we're looking for something similar in size and scope, maybe 161.8 of this, or even 100%. I would think it would go above 47. So we'd be looking for 161.8, maybe up to 49.71, 49.90 as a fifth wave to complete this big C wave. And I've used this one because I was thinking, truncated fifth or whatever. I don't want to get into all of that, but I was using this high instead of this high. If we use the other one, let me see. Yeah, we go through it by too much. So that's why I was using this one. And we've come down into the thick part of the volume cluster, which is right here. Not quite to the point of control, but it's, it's not necessary to come to the point of control. It's necessary to come, not necessarily necessary, but when you do get an area line up perfectly with a really large section of volume where a large amount of volume is traded recently, then I would think, I mean, I haven't gone back and back tested it by hand because that would take weeks to do, but from what I've seen recently, a lot of very good reversals are occurring from areas in the market geometry when they align with volume cluster areas. Okay, so we'd be looking for another wave up now. Makes sense? So what I'm thinking is come up to here. 60 or maybe a little bit higher. Maybe if I actually connect to that wick down there, then maybe up to 75 or 80. You have a warning line from one of the median lines right here as well. So all of this looks like a very good spot for another major high, which would bring us back to the 78.6 of this wave, which is at 60. We may come all the way back to the 88.6, but I would think 78.6 would do it. 6. That's up at 83. And then your average daily range high is up here too at 50. And if we went below it by this much, 10 ticks, then maybe we will make it to 61 or 71. Okay. And that low today was a very sharp low. I got in way too early before those major areas were hit on the on those big tick charts. I was getting in at 21 when it came down to 98, so it was about 25 ticks too soon. And then yep, we get this churn bar on a major spike right before the news announcement. I've said this every week, the news announcements will tend to trade us out of a major area. Sometimes they just go straight up and straight down and go crazy, but oftentimes they'll use them for a directional move out of an area. And that's what we saw today. So any questions on any of that? Yeah, I suppose I could have waited for the bottom of that channel, couldn't I have? Isn't that just beautiful? You got two selling, well, this is a weak selling climax churn right here. This is a weak climax. This blue bar, purple bar is a weak climax and churn. But you can see the density of these three bars is increasingly churn, meaning that we have higher and higher and higher volume per range. You have 183. Goodness gracious, that's pretty high. 183 for the relative density, that's pretty high. And then 234 for the relative density, that's really high. And then 280 for the density, 290 is incredibly high with a major churn bar there up at over 500% with a huge volume divergence, just like yesterday. Just like yesterday. did we have yesterday? I closed perfectly. Well, this would have been perfect, but that's well enough. What did we have? And very strong RSI divergence. I'm not going to bother refreshing the chart to show it. We had just an incredibly huge and beautiful volume divergence signal. That's one for the textbook right there. And what do you have? As you're coming down, you're already getting churn before you're even breaking out of that low. You're already getting a churn bar. So even up around 92, 93, you're building very high volume per range. And once they get it below that low, it just shoots straight down and right back up, closes at the midpoint. Again, 500% relative volume, 200% relative density, which is very high. Today we had just quite incredibly high density on the 2 minute here. That's why we use that volume divergence pattern. You don't always see it, on the C waves especially, depending on how many bars wide or the length of the correction, the number of bars within the correction, depending on the size chart that you're looking at, depending on the size of the correction. If you have a low number of bars, let's say less than 20 for that correction, that C wave is going to be a V bottom or a V top. If you get upwards of 60 bars, you'll typically have this volume divergence signal come through. And in this case, this really isn't, it is technically part of a correction, but it's such a large move. I mean, that is, how many ticks is that? It's quite a large number of ticks, 150 ticks. Yeah. So really that area would be from the 20 minute. And then on the 20 minute, of course, you're not going to see the volume divergence. You're going to see a V bottom, just like I've just said here. See it? This is the V bottom right here. These 2 bars. Straight down, straight back up. And yes, then it does go sideways as we're waiting for that report. The volume dries up just before the report and actually does turn up before the report and then the report. For some reason I thought, well, maybe it'll go back down, but no. Nope. So we're looking for a break of this high to potentially put in that C wave high, which will end on 5 waves up, which would be coming up shortly, sometime this evening, up around 60. So fill that Friday close from the prior week, Friday's close here, 56, take that out by a few ticks, and then come on down. That's what I'm looking for. We'll see what happens, but all right, so any questions? I think we'll call it a day and try to get this video cranked out. Moved value up close to the end of RTH. Absorption occurring there. Yeah, I think we're going to do something, once I get all of the training videos done, we're going to do something like this a couple of times a week about, the recent past couple of days, just to make it sink in, because I'm thinking this stuff, but I can't teach while I'm trying to trade. It throws me off, and then I miss stuff. And Plus, I don't have the benefit of hindsight, do I? It's always nice to have hindsight when you're teaching. But yeah, you'll get it. You'll get it. It's actually, sounds cheesy, but it is good to use the hindsight to your benefit. Go back and mark up the charts and see exactly what it looks like when these reversal patterns occur, and get that stuck in your head. If you'll spend an hour a day even, just go over the recent day, just go put this guy on here, this little synchronized scrolling. Can't tell you how many hours and hours and hours I've spent doing exactly this. Just here, let me do it like this. Get your synchronized scrolling. Get a 20, a 5, and a 2. Preferably a tick chart. One at least. Oops. How do you make it snap to the middle? You don't.
You can't. Well, that's not true. Stop right there and then grab the top or bottom and then just go up or down. No, you got to grab it with that. Yeah.
Uh-huh.
There's your reason I'm here.
All right, cool. So put your little S on those charts. And then come back and mark it up as you're watching it. As you're coming down into that low. Really, you need to see more. I'm putting these 3 on one screen, but you need to have one on each screen. And yes, you need at least 3 screens to be able to trade effectively, at least like we're doing. So if you only have one screen, it's time to graduate kindergarten and move to first grade. Get yourself a new graphics card or whatever it takes, and get at least a couple of screens, few, and then do this bar by bar as you're drawing. You get the luxury of choosing when the next bar plots, and just do it bar by bar. Of course, you want to refresh the screen so you don't see all of these relative volume signals. And then as you come into the lows, and that's another thing. On the 5-minute, we had the warning line of this median line, the 100% warning line. So all I did was draw from the prior day's high to the overnight high, which was a beautiful, again, that's a particular pattern there. Strong buying climax followed by a very strong extreme churn bar. That's the bar on which they're stopping the move. Right there, they are stopping the move. Sometimes that will be what leads to the volume divergence signal. Just depends on the area that you've hit and the market structure that you're in. But that was obviously somebody saying something. Who knows? And then let's do it. So yeah, I've got high to high, and then it draws the median line and the channel line from that low, which gives us the low here. And then we break out of that here and then come down to the warning line and S1, and then put in that second wave low, which was a nice, really nice little churn bar on the 2-minute right there. Cool. Oop. And you can take and click on that S again and then highlight that bar and center it, and then do whatever you want to do. Line it up. And take a screenshot and add it to the massive library of screenshots that I know every single one of you are building out. And then study them every night, add to them every night. Once we get this website done and all the documentation done and training videos done, then we'll be doing this essentially, and only this for every training session. All right. Dan, can the sync tool work across multiple instruments? No, it can't, but I'm going to add an option where you can right click on this and say same instruments or all charts, so that you can have it, because I've wanted that option before. So I'm going to do that. This is turning into just a massive undertaking here. But the new version is going to be so much easier to work with. We've got so many hacks in Ninja that I think it's eventually going to blow up Ninja. So we had to create a new drawing system. And then it'll be easier to move over to Ninja 8 and multi-charts and trading view and all that stuff. Yeah, it will be. Hey, Mark, thanks for your presentation. In your last CL template, you have included the continuous contract. Can you explain what you see on the continuous contract that you don't see on the month over month? Yeah. So so with a continuous contract, it's merged, back adjusted in a different way than how they splice them together when they merge, back adjust from contract to contract. It's actually, it's retaining closer to the true values that were traded on the day that you're seeing. So on the 11th of February, we're down here at 26.63. That's actual. It may not be exactly 100% precise as to what was really traded that day, but it's much closer than what you would see on the merge back adjusted contract. So if I open another 55 minute, and I'm using 55 minutes so that I have 6 exact bars with the same amount of time data. So if I use the 7, so to 55, I don't know, was it 200? It's not going to be anything close to the same. You see, so here it's at 35.40. Over here, it's at 37.40. And then back over here, we're at 26.13, whereas over here, we are at 32. So the further back you go, the worse it's going to be as far as, oh, I didn't set this right. Hang on. I got to make this RTH. NYMEX Energy RTH. There we go. All right, so now, see, You've got the low there is at 3202. The low here is at 2614. So you see the high right here? We broke above that high on March 11th. Over here, we didn't break above that high until April 27th. So the wave structure is completely different from the continuous contract to the regular merge back adjusted contract. The continuous contract looks like we are already in a very massive bull market that is nowhere near ending. If it's ending, it's only making a temporary high, at which point maybe it'll retrace back to 40 or 41 or something like that. But over here, it looks like we've put in a major corrective high on the weekly and the daily, which will then take us below 32. So you've got widely differing, let's see here, where are we at? It varies differently from one to the next. Does that answer your question? Let me see if I can draw this in. Well, just this low right here, you see how far away that low is from the ultimate low here? 32 to 34, it's not very far. This one's 26 to 31. That's greatly different. Channels don't look too terribly different, but when you're drawing the channels on the weekly, you can't trade the continuous contract. It's not, nobody can buy or sell it. It's just it's an index, if you will. It's just that continuous contract is trying to show you truer prices for historical. It's an attempt to show you better, truer prices. The merge back adjusted is when it splices the contracts together, it's using ratios and weights to tighten the gaps. Because when you're trading, you got time decay with futures, just like you have with options. So when you move from one contract to the next, when you move to the next, you've got another 30, well, with crude, you've got another 30 days of time decay. So you have that time value added to the price. So there's always going to be that big gap between the two contracts. So the merge back adjust tries to fill that gap with weights and ratios and blah, blah, blah. The continuous contract tries to fill the gap a little bit without skewing price so much, while leaving you with relatively similar to true prices. Not necessarily 100% true, but close enough where it doesn't, you're not going to see the true 148 or 149 like it was at the high in 2007 on the continuous contract, I don't think, or the low at 33, was it, back in 2009 or 2008, but it'll be close. With the merge back adjusted, it's going to show you, I think, 165 or something crazy, and then the low is at like 40. So yeah, you always trade the current contract. Can't trade the continuous. And you don't have live data for the continuous unless you have IQ feed or kinetic or something like that. If you have CQG, then you're not going to have the live data. But I can always right click and reload it to get an idea of where I'm at. But you see how we have this kind of rounding top here? That's why I'm thinking this is the high. At least a major high. May not be the major high, but I think we'll break this low before we break this high. think this low will be taken out before we take out this high. But we'll see. Okay, man. Right. Any other questions? Yeah, you've got to start with the whole picture. Yeah, you should go back and read that book if you're wondering about that. The Elliott wave principle, just how to find wave fours. And actually, you can just go mark up some charts and see it. All right, you guys. Hasta mañana.